Dear students, this lecture is for 5th Sem BCom. The subject is Accounting for Managerial Decision. Today's topic is Inflation Accounting and the subtopic is Lease Accounting. Unit 5, Session 55. Students, the learning objective of this session is to acquire practical knowledge on lease financing in different situations. At the same time, the session outcome is that students will be able to know that leasing is a new source of financing capital assets where a company forced to look for an alternative means of financing the projects. Firms are required to go for massive expansion, diversification, and modernization. Essentially, such projects involve a huge amount of investment. High rate of inflation, severe cost escalation, heavy taxation, and meager internal resources forced many companies to look for alternative means of financing the projects. Leasing has emerged as a new source of financing capital assets. Let us solve a problem in order to understand the concept. Sunshine Leasing Company Limited provides you the following information and requested you to suggest whether the proposed lease is feasible or not under net present value method. Cost of asset 30 lakh, cost of capital 10%, rate of depreciation 10%, tax rate 35%, lease rental per year 9 lakh rupees, the present value of annuity of rupee 1 at 10% for 10 year is 6.145. The solution is like this. Calculation of cash flows after tax. First, we have to take the lease rental as 9 lakh given in the problem. This will be subtracted by depreciation, that is 10% of 30 lakh as 3 lakh. We'll get an amount of 6 lakh called as income before tax. After income before tax, that is 6 lakh, we are supposed to subtract the tax rate at 35%, that is 2 lakh 10,000. Later on, we'll get an income after tax such as 3 lakh 90,000. For this income after tax, we have to add back the depreciation as 3 lakh. Finally, we'll arrive at cash flows after tax, that is 6 lakh 90,000. So the next step is to calculate the net present value of the project. For this, the formula is that present value of cash inflows after tax subtraction or subtracted by present value of cash outflows, cost of asset. For this, I have taken the cash inflow, that is 6,90,000, to be multiplied by the annuity rate, that is 6.145. I'll get the amount as 42,40,050. This will be subtracted by 30 lakhs. Finally, I'll get the amount of 12,40,050, the net present value of the project. The conclusion is that Sunshine Leasing Company can let out the asset on lease since the net present value is positive. Thank you.